Hello and welcome. You're watching Business Today Television. I am Sakshi Batra and this is What's Hot, the show that focuses on the biggest buzz on the D Street. Well, it turns out that it's a Manic Monday and it's playing out as the bloodbath is intensifying with the Iran-Israel war hitting global markets and dealing a heavy blow across the board on various asset classes, including the equities at large as well. For now, if we look at the Indian stock markets, we had a tough start. The Nifty, of course, slipping below 23,700 to begin the day. We also did see the Sensex dropping about 2,400 points. At the lowest point of the day, we saw investors losing 12.5 lakh crore rupees that were wiped out in just the opening trade. In fact, we have been also seeing that the crude oil prices are the big reason why the markets fell so sharply. There was a 25% surge in the crude oil spike in the last 24 hours that we've seen. The Brent crude is above $110, $114 a barrel. Remember, this is the level that we've not seen in the last 4 years for crude oil prices. This has also led to a sharp spike in the kind of fear index that we are seeing and the fear in the markets that is leading to a lot of nervousness on the D Street as well. Across the board, there is a sea of red. All the sectors of the Nifty are trading in the red right now. You can actually look at India VIX up by 21% at 24 odd levels. So the fear is intensifying. Not even a single index, not even like defense for that matter, is stepping up to buck the trend at this point in time. Barring just two stocks on the Nifty, Coal India and Reliance Industries, rest all of the stocks have fallen in trade today. And that's what we are going to be trying to understand with our experts who will be joining in. We have a very special guest joining in. Ms. Amisha Vora from PL Research is now joining in. Warm welcome to you, ma'am. Thank you so much for taking the time out for this conversation. We'd invited you for this Women's Day special, but looking at how the turn has taken over last weekend and how the markets have opened, we have to focus on the sharp drop in the market levels. And how are you reading this crash in the markets right now? And what do you think is in the offing? Are we in time for, worse than what we are seeing already? Should we brace up for more impact or will things settle down? Give us an understanding, ma'am.
So, Sakshi, the typical global trade always is long oil, short India. Because India is very large extent dependent on imported fuel for running its industries. And because of this war, not only that oil supplies, oil prices are at a question mark, even the gas supplies have stopped. Now, which means that currency, equity, bond yields, all will be at a receiving end. And the basic assumption with which Indian markets were functioning about low inflation, low interest rates, that also can get challenged if things prolong. Now, none of us we know about how long the things can prolong. But having said that, whatever has happened also has huge cascading impact. Because the moment your oil supplies or gas supplies in particular, which has happened, are curtailed, down the line, so many industries are getting now less gas. So you cannot even predict the supply chain, you cannot predict the cost, the coal prices have gone up, aluminum production, 6 to 7% of global capacity has stopped in Qatar, aluminum prices are shooting up, and I fear that this kind of a jump in oil prices, which we are seeing after Iran's president or the highest authority is of now saying that he no more wants to attack the neighboring countries, suggests something very severe.
Yeah.
And this can have, a huge cascading impact.
Absolutely, ma'am. So, what was initially being thought of that, a conflict that could probably be contained in about a week's time max has already entered into the second week as well. And, the crisis is only intensifying in West Asia at this point in time. I think nobody imagined that it could carry on. But that's also the situation that we've seen with the previous wars. When the Russia-Ukraine war had started, again, there was an expectation that it would be contained one. It went on for and it currently also continues. 4 years on, and therefore the kind of anticipation that investors have is now completely topsy-turvy. What exactly should be the strategy that retail investors must have at this point in time? Should one look at this as an opportunity for long-term portfolio building, getting into the market, taking that big risk at this point in time, or is it the market when one has to completely save the cash, wait and watch out? What is it that you're advising, ma'am?
So three-pronged approach. One is, in case you are part of the mutual fund investments, then brace yourself emotionally, go through the pain and continue your investments. Because at least we are not visualizing that it is going to immediately a 3 to 5 year world war with nuclear. So please
Okay.
continue your investments. Second, which I always have been telling for a while, that multi-asset is the right approach, and fixed income and equities will really.
All right. There's some disruption that we are facing in the audio, Amisha ma'am. We'll try and connect back to you. There is some audio trouble. We were not able to hear you very clearly in your last sentence, so we'll just try and fix that. Meanwhile, viewers, we also have my colleague Aishwarya Patil joining in to share with us the latest updates on the crude oil and what to expect going forward from here. We are already seeing a lot of these oil producing nations, they are cutting the oil production at this point in time as well, and therefore there is again a heightened concern about the supply issues at this point in time for all the oil importing countries like India, and what the prices could be going forward. So Aishwarya, already a 25% spike is what we've seen in the last 24 hours. It's at $118 per barrel. When we talk about Brent, this is the highest level that we've seen in the last 4 years. We've not seen such a level at this point in time. And there are no signs of abating of the current intensified actions that we are seeing across West Asia. So what is it that we can expect at this point in time? Do you see the prices spiking even further? What are the conditions that you're looking at this point?
Well, what's important here is what the Indian government and some of these OMCs have been collaboratively working together in order to see what the supply chain constraints could be like. Since last week on Friday, in fact on Wednesday, the ministry as well as IOCL, ONGC, BPCL, HPCL, all of them have been working on looking at what are our LPG supplies looking at, what are LNG supplies looking at, who will be our other partners. And as far as crude is concerned, that is also being diversified. In fact, Russian crude has been accepted in India, even though we've been talking about the US-India trade deal. So as far as these OMCs are concerned, again, the word coming in from the government and some of these OMCs is that they already have 50 days worth of crude available to us. Over and above that, on Saturday itself, we heard from the OMCs that as far as LPG is concerned, we are supplying. We are getting our supplies from the US. We have a big $1 billion trade deal with the US as well. Apart from that, Minister Hardeep Singh Puri is going to address in the parliament today some of these concerns. Just a couple of hours from now, we will hear from him about what else is being done. as far as our Hormuz Strait supply is concerned, that has now been reduced. Earlier it was about 40%, that has gone down to about 30%. So we're trying to supply our crude and LPG supplies from other routes, is what the government is saying. And we also saw reports from Kepler earlier last week saying that we do have some vessels available if we do need or fall short of crude. So that's the update so far. Seems like India may be in a comfortable position, but you never know. This is a volatile
Absolutely,
situation.
it has
and
to
a
be
war
looked at as a
situation.
developing situation. Aishwarya, do help us understand. A lot of viewers would have this question, since the LPG prices have already been surging. Are we going to be seeing a petrol and diesel prices also rise? What are you hearing from your sources at this point in time? What is the government telling the OMCs at this point in time? Will they have to absorb this loss at this point in time, or will there be a condition where we will see some spike in petrol and diesel prices?
Right. So as far as petrol and diesel prices are concerned, the government has said very clearly, in fact, top officials have confirmed that there will be no change in oil prices, there will be no spike there. But on the LPG side, government officials have indicated that there will be an increase, and 60 rupees hike is what has been done on the LPG prices, both for the PM UAY Ujjwala users and the non-Ujjwala users. There's a 60 rupee hike. Apart from that, government has mentioned clearly that fuel prices, your motor spirits, will still remain the same. And for the OMC specifically, the government will be absorbing a little bit. 70 rupees of that will be under recovery for some of these OMCs like IOCL, HPCL, BPCL. So a little bit of a hit there, of course, but as far as the end consumers are concerned, 60 rupees for them as well. So that's the update on LPG prices.
Okay, thanks a lot, Aishwarya. Keep an eye out on that. Of course, we will be taking all those updates from Mr. Hardeep Singh Puri's, address, and to try and understand how is the government really gauging the situation at this point in time with respect to the oil and gas situation. Let me go back to Amisha ji. Amisha ji, you were talking about a three-pronged approach. If you could please continue with that, and then we will come to the oil and gas aspect also. All right. Okay. I think we still do not have Amisha ji in a clear line right now, but let's look at how the markets are looking at this point in time. Look at the oil prices. Remember, they've already jumped in the last 24 hours about 20-25% odd, and we are seeing a impact on the oil and gas story. Even the upstream companies, ONGC, Oil India, which are usually seen as those which are benefiting from the crude oil spike, are not really showing you that kind of a surge in trade today. They're not really bucking up the trend. Look at ONGC, it's down by 0.6%. This is despite the fact that whenever the crude oil prices surge, it's the upstream companies like ONGC and Oil India that benefit the most, but that's not happening. Why is that not happening? The clear reason is that one is still anticipating that there could be some kind of diplomatic talks that could take place any moment. Any tweet that comes in which suggests that things are on the progressing side, the situation could soon turn as well, and therefore there's a lot of caution. But the OMC is over a 5% cut for IOC right now, even though it's improved from the day's lowest point right there. Look at the other OMCs at this point in time, the gas related stocks. There is a lot of uncertainty that's grappling the oil and gas situation at this point in time, and therefore that is getting reflected in the oil and gas story too. Apart from this, if you look at the crude derivatives and the stocks there as well, look at the paint stocks for that matter, look at the tire stocks for that matter, they are also seeing and feeling the brunt of it. Asian Paints, the likes of, stocks like tire stocks for that matter. Look at Asian Paints right now. It's down by 4.7% odd. Berger Paints about 4% lower in trade as well. So those are the kind of stock impacts that you're already seeing. Crude impact because most of these companies were already penciling in, not just too long ago, just about 3 to 4 weeks ago, they were already penciling in, like Amisha ji also pointed out, a steady scenario of lower crude oil prices, of lower inflation, and a stable rate interest scenario as well. But on the contrary, this war has completely changed their immediate, outlook on how things will pan out in the current quarter and the next quarter for that matter as well. And therefore, they have to shell out more for the raw materials at this point in time. And therefore, you are seeing all of these companies really feel the heat, feel the pressure at this point in time as well. Look at the other sectors as well. Even IT is down by 1% in trade today. That's also not pulling up. Look at the banks. That's where the pain point is emerging. PSU banks is the sector which is facing the maximum heat, 5.5% lower in trade. Look at the Nifty bank, about 4% lower in trade as well. That's where the pressure is truly emerging. Now, why are the banks down? You would say that, this is not directly linked to the war at this point in time. Why are the banks feeling the heat? Well, whenever this kind of an intensified war happens, India tries to understand what could be the macro impact. What could be the impact on the crude oil-led inflation? What could be the impact on the fiscal deficit, on the growth outlook? And therefore, you can continue to see that there is a lot of fear that is trickling into the banks, which is worried about the macro scenario and how that develops from here on as well. And that's where the pressure point is. Vis-a-vis the Nifty bank is the one that is underperforming, 4% lower at 55,490 odd levels at this point in time. Within that, it's the PSU banks, the likes of SBI, Union Bank, Canara Bank, Bank of Maharashtra, Bank of India. These are the stocks that are feeling the biggest brunt at this point in time, and that's where the maximum pain is being seen at this point in time as well. Among other sectors as well, when we look at these sectors like metals, for instance, that's down by about 3% as well. Let's also look at some of the other sectors like even oil and gas we already marked out for you. Even FMCG and real estate, that's down in trade. Only one stock on the Nifty is in the green, and that's Coal India for now. But the big question is that is this the beginning of another energy crisis that we are watching out for? How long could this really take forward? And of course, what could be the larger impact on the Nifty? Which are the stocks that are dragging the most in trade right now? You can see Indigo, again aviation, they have the biggest spending component going towards fuel, and with the rise in crude oil prices, the ATF fuel prices have shot up as well, and that's causing pressure on the aviation related stocks. Look at the stock of Indigo, Interglobe Aviation, down by over 6% at this point in time. Look at SBI, look at Shriram Finance, Maruti Suzuki. These are all the stocks anywhere between 5 to 6 odd percent lower in trade right now. Look at L&T, for instance, 4% lower in trade at this point in time as well. When we look at the top laggards in the broader markets, well, you do see a lot of other names also coming in. Meesho is down by 16% today. Look at the kind of crash that we are seeing for stocks that you would otherwise feel have no linkage to the war or direct impact there. Look at the kind of fall that we've seen there. Rain Industries is down in trade. Look at even other names like Tejas Networks, for instance, 8% lower in trade. You have names like even, of course, banking names like Jammu and Kashmir Bank, that's down. JK Tyre, again the tire related stocks. Rico Auto and Uno Minda, again from the auto ancillary pack, that are still facing the heat at this point in time. Are there any bright spots that you do see in this kind of a scenario? Yes, there are. When we look at some stocks, not a lot of them, but some stocks that are still holding up in this kind of a weak setup in the market. R Systems International, that's up in trade. Look at Rana Sugars, that's up in trade. Dhampur Sugar, so sugar stocks is up. Bajaj Hindustan Sugar, the entire sugar pack is up in trade today. So watch out for that in case you are a compelling trader that you need to trade something on the buying side, even on a day like today. Look at the sugar space. That's where you might just end up getting some safe, momentum on the higher side. The entire sector is on the move as far as the positive momentum is concerned. We also have D Development Engineers, that's up by about 9 odd percent in trade. Cupid is up by 10 odd percent in trade as well. Dwarkesh Sugar, again a lot of these sugar related names that are consistently hovering higher. Hindustan Oil Exploration, HOEC, from the exploration side is actually showing you some uptake. You're also looking at ABAN Offshore, again, beneficiaries of the rising crude oil prices. Those are the stocks that are still holding up in trade at this point in time as well. So I would say sugar stocks and look at, some of these oil exploration companies that are still showing you some positive signs at this point in time. Let's also look at some of the other key names that you should be watching out for in the Nifty Next 50. Again, it's a sea of red on the Nifty Next 50. None of the stocks are actually showing you any kind of a green tick. You have a sharp fall in names like BPCL, Canara Bank, Samvardhan Motherson, PNB, IOC. You're looking at PFC for that matter. You're looking at REC for that matter. Even defense names like Mazagon Dock, are down by about 4 or 5% in trade. You're looking at even names like railway related stocks are down, travel tourism related stocks are down, IHCL is down in trade at this point in time as well. Even insurance related names like LIC are down in trade at this point in time. United Spirits is down, Adani Green Energy, Adani Group stocks as a whole are trending lower at this point in time. Adani Ports, Adani Green, you name it, all these stocks are down. We've seen Eternal down in trade. We have seen the kind of stocks that we are seeing at this point in time. You're looking at Info Edge and these kind of stocks that are lower in trade at this point in time. So you do see the Nifty down by about 687 points, 23,761. So that's where the pressure point is clearly emerging in the markets. What we'll do, viewers, is that we'll wrap it up on this note, but do stay tuned with us as we continue to track for you what's happening into the markets, what strategies you must adopt, and we will continue to get you market experts on the other side as well. Stay tuned with us on Business Today Television. Much more for you to track on this destination.
The Iran war is shaking global energy markets. But for India, the real